Hello. In this video, we're going to discuss the RSI, also known as the Relative Strength Index, which is essentially a momentum indicator. But first, let's clarify, when you talk relative strength, that is not the RSI. So relative strength is how something performs relative to something else. So take, for example, Apple as a stock. It is a large cap, so you're looking to see how Apple performs on a given day relative to the S&P or the spider. So that's relative strength. But what we're looking at specifically is the RSI, Relative Strength Index. It's often called an oscillator, and the kind of the math, without getting too involved in terms of the math behind everything, it essentially it's a number between 0 and 100. Typically, you look more for values between 30 and 70. A value of 70 or greater is typically, and I say typically with quotes because you have to be careful, typically considered what's called overbought and generally either going to enter a period of consolidation or a trend reversal. So if you're in an uptrend, you're going to start pushing 70. If you start going over that, you're getting into what's quote overbought territory. But be careful because you can stay overbought. But typically, that does indicate that you're either going to enter a period of consolidation, kind of sideways trading, or a trend reversal. And then on the other extreme, 30 is typically an oversold condition. So if you start to dip below 30 on a downtrend, once again, you're probably going to either enter a period of consolidation. And by consolidation, I just mean sideways trading or a trend reversal. You typically use a 14 period look back. So if you have the RSI on a monthly chart, 14 periods is going to be 14 months. If you have a minute chart, 14 periods is going to be 14 minutes. So 14 periods is essentially candles that's on any given chart that you're using. And as far as what causes RSI to move up or down, it's essentially the size and number of moves higher or the size and number of moves lower. So those two kind of come into the equation in terms of what's caught, where your RSI is. And then finally, just to kind of smooth things out, a number it's used with a number 100 to kind of just make it a little bit more meaningful. Um, Probably the greatest way you can use RSI, because like I said prior, you can get into kind of overbought conditions and you can kind of stay up in here or you can stay in oversold conditions. So you can't necessarily say just because down here RSI dipped below 30 that markets are going to trend higher, because if you look at this point right where it started to dip lower, we really entered a period of consolidation, sideways trading. But what you can start to look at for little pops is if we look at this downtrend, we have a low, a little pop higher, and then a lower low, another lower low, another lower low. So there's a series of lower lows. So obviously this is trending down, continuing to trend down. But look at what the RSI is doing. It's actually starting to trend higher. It's still in oversold territory, but it's actually starting to trend. It's starting to show you that even though we're putting in lower lows, we're actually starting to lose momentum. And lo and behold, what happens is you actually start to get a nice little pop. So if you're a long-term investor, you really aren't going to necessarily look at this too much. But if you're looking to maybe manage a position, get in a quick trade or whatever, then these can be some pretty good opportunities. So again, you look for some divergences. And then lastly, just to repeat, just because you are above 70 and a lot of stocks are going to act differently. Yeah, you may be 80 for overbought or 20 for oversold. So you really, like anything, you want to get a feel of how that particular security instrument relates with different values, different lookbacks, and so forth. But just be careful. Just because something's overbought does not mean sell or go short. And if something's oversold, doesn't necessarily mean cover your short or go long. So again, look for divergences, and like everything, understand how your particular instrument that you're studying, how RSI works with it. So that is a quick class on RSI. And as always, happy trading and thank you for listening.